Out what's happening within the entire Realty pack. There is the GST push, which of course could come by. And let's understand the implications. Sushil Kumar Modi from Lodha Group joins in on the show right now. Sushil, hi, morning. Good to have you on the show. Sushil, this week itself, we'll have the GST rationalization. And if the chatter is to be believed, cement is going to come down, so would paints to 18%. How do you see this impacting your overall project costs and margins?
So, Aisha, thank you for having me today on the channel. So, GST overall, leave aside the cement, but overall, the GST rates getting rationalized is obviously going to be far, far positive for the economy as such. And to that extent, we look forward because at the end of the day, as you know, our industry is kind of reasonably linked to the economic growth and thereby the income growth at the end of the individual consumer and more so the mid-income segment where we are, significantly focused on. So in a specific, the some of these input related cost of ours where the GST, if it gets rationalized and to that extent goes down, obviously we'll have the reason to potentially reduce our input cost and thereby, potentially leading to some sort of a betterment in the margin. But let's see how some of these things play out. It's a bit early to say or speak about those.
Right, Sushil, hi, morning. This is Nehi joining in. The other news piece we wanted to address with you is this registration price hike coming in from the Karnataka government to 2% from 1% earlier. Now, if you take a look at your company's presence in Bangalore, Bangalore has contributed to Lodha's second highest region-wise pre-sales of 8,400 crores of GDV in quarter 1. Now, with this news flow coming in, give us a sense of what the impact could be in the market that has great significance in your portfolio.
See, Bangalore contribution in our pre-sales was not 8,400 crore. That number was in our business development that we delivered for the first quarter of around 23,000 crore, of which the Bangalore contribution was around 8,000 crore plus. Pre-sales wise, perhaps the Bangalore contribution was more like three-digit number. But more important is yes, Bangalore is now is a city where we are now putting our feet on the pedal and looking for significant growth as we have moved from the pilot stage to the growth stage, which we typically do for any of the new city that we get in. So we are looking for a significant growth in Bangalore, potentially doubling down from our last year pre-sales. And to that extent, some of these registration impact obviously in the short term can have some impact here and there more as a perception. But at the end of the day, we have to always keep in mind that the product that we are dealing with is housing, and housing is the basic necessity. So some of these things people, as a consumer would always look more from a long-term standpoint because the basic necessity cannot be deferred for long term. So yes, here and there, some impact is possible, but nonetheless, we clearly see doubling down, at least in the Bangalore city, from our pre-sales standpoint in this financial year.
All right, so that's the take coming in on the Bangalore market. Hi, Sushil. Morning, this is Shrishti. But looking at some of the other numbers, it was your Q1 pre-sales number at 4,450 crores and a strong operating cash flow as well. Help us understand how confident are you to meet your FY26 guidance? What factors could be at play?
Our confidence, is as good as what it was the previous years. As we have said time and again, that our 20% growth guidance is not for any specific year, but it is more for the short to medium term, and thereby year on year we see ourselves to be growing at 20%, of which more like 5-6% will be coming from the pricing growth, and the rest from the volume growth. So we remain confident. Typically, in our industry, the first half where it generally contributes more like 40-45% of the pre-sales, and the second half where in our country most of the festivities kind of kicks in coincides, and which is what we have gone in now as the festivities in has already started in the country, in particular where we all are sitting. So second half end up in contributing more like 55-60% of the pre-sales. So our business, what we have delivered in the Q1 is more or less on the lines of what we have set for ourselves, as a business plan. Yeah, some bit plus and minus to the extent that, we lost 2 weeks in geopolitical situation that emerged in the Q1. As we all know, India-Pakistan nuance that played out. So to that extent, the consumer was not as much kind of coming out to visit the sites and, thereby transact. So to that extent, we could have been some bit better, but nonetheless, those all kind of, get or will get made up in the subsequent quarter. So we remain confident of delivering 20% growth in pre-sales as we have set for ourselves.
Okay, good to hear that. But tell me, how is it that you're planning to deploy this 5,000 crore rupee from the upcoming NCD fundraise, and how is it that it's going to impact your debt profile?
So this NCD is not any incremental cash flow that we are raising. Our overall, the capital structure in any case, as we have said time and again, is a very, very disciplined. The 20% growth rate in pre-sales that we intend to deliver in medium term is one, but that will always be a subset of, even more important, the disciplined capital structure. So, which is where we have pegged that we will always work within the ultimate boundary, or so-called Lakshman Rekha of 0.5x in terms of net debt to equity. And that is the cap for, to get into any unforeseen situation. But more often we would be hovering around potentially more like 0.3, substantially lower than the 0.5 of Lakshman Rekha. So to that extent, some of these, the different instrument of raising the fund while being within those parameters is basically to diversify our source of capital, even in the debt market. So far we were more and more, our debt was more from banking system, and now we are getting into the capital market as well. As our credit rating has improved to the AA from, all the rating institutions, premier institutions like CRISIL, ICRA or India Rating. So that enables us to get into the debt capital market and thereby continue reducing our cost of debt, quarter on quarter, as you would have seen in last potentially 16 quarters. Every quarter we have reduced our cost of debt, and coming quarters are also not going to be any different. So these are just basically diversifying the pool of debt capital to continue enhancing efficiency of our debt cost.
And lastly, before we let you go, in terms of your metrics in Q1, you have achieved over 90% of your FY26 business development guidance in Q1 itself. While you are confident of that 20% guidance on pre-sales, any upward revision to your business development guidance?
Frankly, we don't believe in, upping the guidance from time to time. Important point to kind of drive from here is that with the amount of business development that we have ended up in doing in Q1 itself, that clearly shows thereby that the launch pipeline also has enhanced significantly in tandem. At the beginning of the financial year, our launch pipeline was more like 18,000 crore, but with the amount of business development that we have done and our efficient way of working, where subsequent to the business development, our ability to bring some of those land parcel into the market quicker, between 9 to 12 months, enables us, or has enabled, to increase the launch pipeline from 18,000 crore at the beginning of the financial year to now more like 25,000 crore, of which 8,000 crore launch has already happened in the Q1. And the rest pipeline of another 17,000 will be in the next 3 quarters. So that gives you the sense of the strong pipeline, and thereby our ability to continue delivering the pre-sales guidance that we have done. Needless to say, business development will also keep happening, and thereby it is reasonably certain that we will outperform on our business development guidance too.
Okay, interesting. Sushil, great to have you on the show. Thanks for your time today.